Hi folks, my name is Don Gardinier. I'm President and CEO of Gardinier Inc. And today we're giving you a presentation on internet calculators and why it seems that we have such a problem finding a real mortgage payment. This presentation is brought to you by Own San Diego Real Estate and by San Diego First Time Home Buyer Programs. So let's take a look at a calculator right here by Bank of America showing a payment of $14.06. Over here on this side, we're looking just at quadrant 1 of the True Mortgage Calculator, and we see a payment of $2,095.37. The question comes up, why the difference? Why such a huge difference? And which one's right? I mean, Bank of America is a huge bank, and Wells Fargo and all these other banks and all these other real estate. There's millions of real estate websites out there that have these calculators. They're coming up with these payments that are so small. And the buyers are finding themselves already in escrow. They're finally getting their disclosures from their loan officers. They're finding out the payments are $700, $1,000, $1,500 a month more than what they expected. So how's that possible? And really, again, the question comes back, which one is right? Is this Bank of America calculator correct, or is the True Mortgage Calculator correct? The answer, of course, is that they're both correct. It's just that Bank of America and these other websites, they weren't giving you the information that you were expecting. They weren't giving you what you thought you were asking for. So let's take a look at how that happens. If we see that Bank of America has got this $1,406 a month payment, and we come over here on the True Mortgage Calculator, we also see the $1,406 payment up here. The problem that we run into is that the whole picture hasn't been presented to the client. That's to say that the loan payment of $1,406 was accurate. It just didn't accurately reflect the entire payment that the buyer was going to have to pay as they go into their house. And of course, to the buyer, they're looking at the whole payment. They need to know what it is that their whole payment's going to be, and they'd preferably like to know that prior to paying for an appraisal and a home inspection and spending a bunch of other money. Okay, so as we look at it then, the problem is that there's not really an easy calculator out there for lenders and for real estate agents and for buyers themselves to use that they can find the information out. The True Mortgage Calculator, though, will give you the ability to do that, and we're going to cover that today. For now, let's go ahead and get rid of the Bank of America calculator. Let me scroll up on my notes here. What we're going to try to find today is how to find the total payment, including principal, interest, tax, insurance, HOAs, and other things. Also, how much a buyer would qualify for if they wanted a payment of X. I'll give me an example. Let's say that we had John who said, hey, my lender said I qualify for a $500,000 house and that my payment was going to be $3,600 per month. And I think my lender might have been drinking a little bit too much because I really only feel comfortable with an $1,800 or a $1,900 or a $1,500 a month payment. So how much does John qualify for with a $1,500 a month payment? And why is there not any calculators anywhere on the web that give you that calculation? Well, the answer is there is one calculator, the True Mortgage Calculator. Very easy to use. We'll show you how to do that as well. Also, we're going to show you how the first-time home buyer programs benefit the first-time home buyers. A first-time home buyer is anyone who has not owned a home in the last 3 years. So you may or may not qualify for a first-time home buyer program, but certainly you know people who do qualify for first-time home buyer programs. You've heard whisperings about these programs in the past and always wondered how they worked. We'll go ahead and show you how those work today as well. Go ahead and stay tuned and watch and understand how they work, because certainly you're going to know someone who would benefit from the information. All right, let's start by pointing our browsers to sd4u.com. I'm going to go ahead and just click my home page here. When you get to sd4u.com, you're going to find a page that looks exactly like this. 4 big buttons on the left-hand side. We're going to go to the first one, Own San Diego Real Estate. Click this huge white button right there, and it's going to take you to our main real estate web page. I want to point out 2 things on the web page before we go to the calculator. The first one is, please stop in and make some type of comment. Let people know, are we doing a good job? Is there something that we could do better? It really helps people to feel more confident when they see that other people have gone in, utilized the services, and have commented about it. So take a moment, let people know how we're doing. Also, follow us on Facebook. We have all kinds of unique information that we provide to our clients on a daily, sometimes weekly basis about intricate details of the market and how it's proceeding, both on the real estate market and the loan market. So Follow us. Click on the like us button. Go in, take a look at the information we're providing. I think you'll like it and you'll want to follow us. Now let's go on up to the menu bar, and you'll notice that on the menu bar we've got this calculator right here. Go ahead and click on the calculator. It's going to open up the input page of the calculator. Now it looks really confusing, like there's a bunch of places there to put information in. And I don't want you to feel too overwhelmed by this, because for the most part you're going to put in 3 pieces of information: your interest rate, your purchase price, and you're going to change your credit score. That's pretty much it. The calculator knows most all of the other variables. Once in a while you'll be in a special situation where the place that you're going to go for is going to have an HOA fee, and this calculator actually gives you the ability to go in and put the HOA fee in so that you get an accurate calculation. If you knew other information about the house, you could go in and do that as well. But for the most part, 3 areas: interest rate, purchase price, credit score. All right. I'm going to go ahead and minimize the screen so that I can see my notes. We're going to go on in and we're going to do exactly what we said. We're going to put in an interest rate of 4%. We're going to put in a purchase price of $300,000. No commas, no decimals. Anytime you're working with a web-based calculator, leave the commas and the decimal places out on the purchase price or any type of loan amount. So this is the purchase price. We're going to put in 300,000. That's 300,000. Click off to the side there, and if you noticed, it pre-filled our monthly MIP and our upfront MIP. The question was earlier when we looked at the comparison between the Bank of America calculator and the True Mortgage calculator, how was it possible that we were so far off? One of the reasons why is that there's really not any place out there that gives accurate PMI data. In this case, it is all factored into the True Mortgage calculator. You don't need to know the information. You just need to know that it's in here, and it's going to give you a very accurate calculation. So it's already added in the upfront MIPs for us. We're going to go on down here. The FHA requires a 3.5% interest, 3.5% down payment. So we're going to leave that in there. We're going to change our credit score, put in whatever your credit score is. And let's say we got a 600 to 619. And just for fun, we're going to add in 35,000, 35000, no commas, no decimals, because we're on a loan amount for a first-time home buyer program, just so I can show the example of how it works. That's it. Interest rate, 4%. Purchase price, 300,000. Put in our credit score, and in this case, just for fun, we put in 35,000 for our second mortgage. Click calculate. That's it. Now we're back to the same page we were at earlier, and you'll notice that it's the exact same calculation we already looked at earlier as we compared to Bank of America. Bank of America wanted to know your first mortgage total. The problem was that you didn't know how to put in a first mortgage total because you didn't know how much your upfront MIP was going to be. $5,066. That's going to get added into the loan. So in this case, the calculator figured it out for you, put it in there, and you can see purchase price 300,000, 10,500 is how much you're going to need for the FHA down payment. Your your upfront MIP insurance is $5,066, and your total first mortgage is $294,566. This left-hand side of quadrant 1 tells you everything about your loan. And how easy was that? You entered in 3 pieces of information, and it turned back around and it figured this all out for you. On the right-hand side, we already looked at this earlier. This is about your payment, and we're looking at the 1406 payment for the principal and interest. That's what goes to the bank for your mortgage. Your taxes are $312. Your MIP insurance $301.56. Your hazard insurance is estimated on this house at $75 a month. That's the insurance in case your house burns down or something like that. Total payment $2,095. So that's great to be able to come up with that answer so easy. And we feel that it's the ease of the calculator that's caused it to have so much success. Currently, we actually have more lenders and real estate agents that are using the calculator than we actually have buyers. We created it for the buyers, so it's very exciting. All right, now we said that we would talk a little bit about the first-time homebuyer programs as well. We'll go back and show how to calculate how much the buyer will qualify for if they want a payment of X. Remember that? We'll go back and show you that in just a minute. But before we do that, let's show you, because we already have it up here, how the first-time homebuyer programs work. In this case, we'd put in an average first-time homebuyer program. It's $35,000 of down payment assistance. So we've got an FHA loan with a payment of $2,095 per month. Here we also have an FHA loan. However, we've added in the first-time home buyer silent second of $35,000. And because of that, we have a payment of $1,878.28 on our payment. So this type of a first-time home buyer program is called down payment assistance, or DAPS. The silent second is a loan that you get which doesn't require any type of payment. Kind of think of it like you borrowed the money from your parents to buy the house, and you told them that you didn't have any money to make any payments to them right then. And they said, that's fine. Listen, when you sell the house, just give the money back and we'll help your sister buy a house with it at that point. That's how a DAP works. The government goes in, they give you a certain amount of money, somewhere between zero and on the top end, usually $70,000 or $80,000 to help you with the down payment assistance. And then when you sell or refinance the house, you give it back and they help the next person with it. So let's take a look here. Because the $35,000 that we have as a down payment in this example is more than the required down payment of $10,500, then we've met FHA's requirement of 3.5% down, and there is no down payment required by the buyer because the down payment assistance program covered it all. But do keep in mind that many times, not all the time, but many times, the down payment assistance program will come back and say, hey, you know, that's all well and good, but we want the buyer to put in some money, so why don't you have them put in 1% or 2%, sometimes even 3%, but usually it's 1 or 2%. And then the buyer would have to put in $3,000 or some token amount to be able to get into the property. Okay, so we can see that we dropped our price by a couple $100, our monthly payment by what, 19, 20, 21, about $200 a month, a little over $200 a month by utilizing the first-time home buyer silent second, and we also reduced the amount of money that the buyer had to put down from $10,500 down to as much as maybe they don't have to put anything down. Okay, now the quadrant 3 is the same first-time FHA loan that we had up on top, and in addition to the FHA loan, we're getting a first-time home buyer MCC credit. An MCC credit is a tax credit that you're going to get at the end of the year. And here's an example. John works at Home Depot, and he's going to owe the IRS $2,400 at the end of the year. You know, we all owe taxes at the end of the year. So to offset that, John's making $2,000 a month, and he has some money coming out of his paycheck every month to make sure that at the end of the year he doesn't get stuck with a big tax bill. In this case, we're going to say that John's having $200 taken out of his paycheck each month. 200 times 12 is $2,400. So at the end of the year, John has saved up $2,400 to go towards his $2,400 tax bill. And that's why he has that $200 taken out every single month. He has it taken out so that he can make sure he doesn't have that tax bill. So if John were to get this first-time homebuyer program, he would get a tax credit to offset that $2,400 that he was going to owe. In this case, on this example of a $300,000 house, 4% interest rate, right? Getting a 20% MCC credit. Sometimes they're 15%. This case we did the 20%. Which one you get depends on where you buy. So in this case, in our example, we said that he's going to get the $300,000 house, 4% interest rate. He's going to get a $2,356 tax credit. Well, that's almost as much as the $2,400 that he owes. He basically owes nothing at the end of the year. Now, John can wait to the end of the year and take that tax credit. And if he did, he would get a big $2,356 refund, right? Because he's got $200 coming out of his account every month. And if he wouldn't need to have it coming out because he's getting the credit. So if he wanted, he could wait to the end of the year and get a big refund. Or John could say, I don't want to have that $200 taken out of my account anymore. And the government would give John an MCC, a mortgage credit certificate. He takes that certificate into his employer, and he tells the employer, I want to reduce the amount of my taxes per month by $196. And so now John gets $196 more each paycheck to go towards his mortgage. He still owes a $2,095 mortgage, but the government's giving him $196.38 per month to go towards it. The government doesn't write a check and send it to him in the mail where John has to wait for it. The government says, hey, don't worry about it. Just don't pay $196 in taxes. You'll bring home $196 more. You apply that towards your mortgage. Your net effective payment, $1,898.99. John's payment, his net effective payment, is about $200 a month less. Now, quadrant 4 is simply the FHA loan that everybody was going to get in this example, plus the $35,000 of the first-time home buyer silent second, and the MCC tax credit. And you might notice that the MCC tax credit is a little bit less this time than it was over here. It's not a mistake. The calculator is correct. You ended up having a lower mortgage amount than over here. Over here, you didn't have that $35,000 silent second. Over here, you do have it, so you've got a lower loan amount, so you're paying less taxes, so you got a less credit. Don't worry about all the details. Just know that the calculator is right. You're only getting $172 over here instead of $196. So your net effective payment, $1,705, as compared to $2,095, like $400 a month less of a payment that you're going to have because you utilize the first-time home buyer programs. Now, sometimes the client will come to me and say, well, Don, that's all well and good, but the lender said I could afford $2,095. I would rather have a $2,095 payment and have a more expensive house. Do I have to take a lower payment, or could I keep the same payment the lender said I could have and get a more expensive, more than $300,000? And the answer is yeah. It's real simple. Just click this max loan option right here. Now your payment here is the same as it would have been before, what the lender originally qualified you for, but your loan amount that your purchase price went from $300,000 to $361,000. John has his choice. He can qualify for $61,000, about $62,000 more of a house at the same payment, or he can qualify for the same amount of house at the lower payment. It's up to John. Now, I said we would a little while ago that we would go back in and we would take a look at some other things as well. So let's click the calculator button and go back to the input page. One of the important things to buyers is to say, wow, my lender said I qualify for $500,000, for $500,000 house, $3,600 payment, and he must have been nuts because I only qualify for, I feel comfortable rather with a payment of say $1,650 a month. Let's get rid of this $300,000 purchase price, and on the monthly payment put in $1,650 and click off anywhere off to the side. You'll notice that the upfront MIP went away and the monthly MIP went away. Don't put any numbers in there. Anytime you're putting a monthly payment in instead of a purchase price, the number is not readily known by the calculator, but it will know it by the end of the calculation. Leave it there and know that the calculator will do it right. Now we're going to click calculate, and now we see that John qualifies for a $235 purchase price for a $1,650 a month payment. If he's just a regular old buyer using an FHA loan and he wants to know how much he qualifies for, there's the answer. It includes everything: the principal, interest, tax, the insurance, the MIP insurance, everything is there. And it also shows what he would qualify for with the $35,000 silent second, the MCC credit, and both programs layered in what the different amounts would be. Let's go on back over to our calculator for a moment. What would happen? Let's go back one more. Let's go back here to the main page. Now, a lot of times the lender tells a buyer, they say, well, John, you qualify for $300,000. But John didn't really qualify for $300,000. He qualified for that $2,095 payment. And the lender says, but if you go to a place that has HOAs or anything like that, come back and ask me, because the thing is that I'll have to adjust that number. Again, that's because John didn't qualify for a $300,000 house. He qualified for a $2,095 payment. So how does that work? If John has a condo, does he have to wait for that lender to find out what the amount is? And in fact, now the lenders are using this calculator to figure it out. Let's look at an example. Let's go to the home search over here. And as you go to the home search, by the way, I want to make sure that you guys are using our home search program. And the reason why I want you to use ours is that it only shows active houses. If you go to Zillow or Trulia or Redfin or any of those other ones, the reason it's free out there is because they're They're trying to get you to input your information, and then they sell that to real estate agents as leads. On our website, we only show active listings. On Zillow and Redfin, they're going to show all kinds of listings that aren't on ours, trying to get you to contact them, but they're all already sold. They're already either contingent or pending or backup offers or something like that. We've scrubbed all of that out. Ours are only showing the ones that are currently available. Save yourself the time and only use our particular web search. All right, now we're going to go ahead and get rid of residential detached. We're going to do an example of a condo, okay? So we're going to get rid of everything except for just the all other attached and townhome. Let's put in a purchase price for an example of maximum $300,000. And we're going to go, let's get rid of all these short sales too. And up here, let's put in 92071. That's the city of Santee, right? And let's pick an item. So we're going to go with this guy right here. We're going to click on it. We're going to scroll on down. Now we're going to remember. Actually, let's not use this one. Let's go back to our map, and let's find one that's not a value range. Here, 188,000. The question is, does John qualify for this $188,000 price? We scroll on down. We find the HOAs are $305 a month. So the question is, with $305 a month, does John qualify for $188,000 for that $1,650 payment that John wanted to keep? Let's go on back to the calculator and find out. We're going to leave this screen open just so that we've got the ability to come back to it if we have questions. Click here. We're going to go to our own San Diego real estate calculator. We're going to put in an interest rate of 4% again. John said he wanted a $1,650 payment, and he had a credit score, we said, of 600. He was getting 35,000 in Santee. We got up to 40,000 that's coming available here real soon. So we're going to use Santee's 40,000, and we're going to do an HOA fee of 305, and we're going to find out, does John qualify for that amount? Well, as we see here, without any of the first-time homebuyer programs, at a payment of $1,650 per month, including the 305, John qualifies for $192, and sure enough, he barely qualifies for it, right? So now John knows that he could keep within the payment that he wanted and still feel comfortable. And of course, with the first-time homebuyer programs, he could go all the way up to $246,000, so he well qualifies for it and more. In reality, what John would end up doing was buying that house at the $192, and instead of having a $1,650, if he was a first-time homebuyer program, he would have a payment of $1,309. All right, so you get an idea on how we use the HOAs to make the calculator with the HOAs to make sure that we're keeping our payment where we expected it to be. If you would like more information on the first-time homebuyer programs, on our main menu under Buyers, go down to First-Time Homebuyer Programs, and under the City of San Diego, click on the First-Time Homebuyer Programs General Info, and it'll go through and explain a whole bunch more. You can contact us by putting your mouse over, or rather clicking, let's see, you're putting your mouse over the About button, and going down to Contact Us, Ask a Question, or right from the home page. If you click on the home page, you can see our phone numbers right on the front as well. You can always send us an email as well here, and you can chat with us here. All kinds of ways to contact us. Make sure to leave a comment on how you liked our calculator, and please follow us on Facebook. Thank you so much for your time today. We hope you enjoyed the presentation. We'll look forward to your comments.